My name is Roshaneh Zafar, and I'm the founder and managing director of Kashf Foundation. Many years ago, when I visited the New York Stock Exchange, the thought came to my head, how do we link capital markets to low-income women entrepreneurs who work diligently every day to earn an income for their families? So this was a conundrum, a riddle that I wanted to resolve, and the gender bond is really a manifestation of that thought. The concept behind the gender bond is to link mutual funds, high net worth companies, individuals who would directly not be able to invest in women micro entrepreneurs or their businesses because they're seen as a very risky investment. So the gender bond aggregates the risk very simply. It puts the risk together. And I will also be talking in particular about the risk of women-led businesses because in our experience, it's more a perception rather than a reality. So the bond in that sense aggregates the risk. It's guaranteed, the risk and the return is guaranteed. So investors will have the confidence to be able to buy the bond, buy or invest in the bond, and indirectly that bond would then link the capital to women-led businesses. So if we look at Kashf's experience of the past 25 years, where we've been at the cutting edge of investing in women entrepreneurs and their businesses, if you look at the risk, 99.5% of the 6 million women that we have provided investment opportunities to have paid us back on time. So as I was mentioning in the beginning also, the risk is more a perception because most of the loans that we provide women directly are not backed by any asset. They are not collateralized. So anything in the capital markets that is not collateralized is seen as a high risk, even if the return is, the return of the loan or the return of the debt is paid back on time. So what does the gender bond do? Simply, it is allowing investors who hitherto would not see women-led businesses as a investable asset class to be able to invest in it. The bond came together when Kashf, when we were looking at other opportunities of raising funds, and we met with Infrazamin, which is a guarantee company, which together we designed the bond or devised the bond in a way that the risk of the bond, as far as the capital markets are concerned, was seen to be very low because it's all guaranteed, and not only is the principal amount guaranteed, but the interest on this is also guaranteed. So initially, we wanted to sugarcoat the structure a bit so that we could get a AAA rating on the bond, and the AAA rating, of course, gives the confidence to the investor that their money is safe and secure. And then that money could, from our perspective, is now going to be invested in women-led businesses. Now, the question is, what difference does this make? And how is this different from raising debt from a commercial bank? And as I was sharing, a commercial bank sees the risk very differently, while the capital markets gauge risk from a much broader and maybe one step removed basis. So the idea was that the bond itself would attract investors who naturally wouldn't see microfinance as an investable class or see women-led businesses as an opportunity for impact. So for return rather. So the bond itself has a double bottom line. It's of course the risk and return like a typical bond, but the impact is of course on the families, the women who use the money. And often people have asked me, what impact does women running businesses, what impact does microfinance have? So if we look at incomes, if we look at savings, if we look at wealth creation, microfinance certainly improves on that. But the biggest change happens in the next generation. What we also see is that when women earn, they not only deal with daily needs of their families, but they also try to invest in the future. And for a country like Pakistan, that's very important because we see women who are earning an income, who are running businesses, are 3 times more likely to send their children to school, are 4 times more likely to feed them better, are at least 5 times more likely to save for a rainy day. So if we look at the concept of microfinance, it's not just allowing low-income families to stay afloat, but it also allows them to arbitrage on a better future. So the bond itself on the back end is simply a financial mechanism to attract capital markets and to attract investors who would not be investing directly in microfinance. This would not be their first call of investment, or it would not naturally happen. It allows that transaction to take place. But when we look at the impact at the front end in terms of women and how they use the money and how they transact their businesses and the kind of self-confidence and the social benefit it generates, then this also has what we call a huge social impact. And that's why we call this a gender bond, a different class of bonds. And we are very proud that this is the first ever gender bond in Asia and South Asia and the Middle East. And we hope that with the success of our gender bond, other companies will also use this as a source of funding, and that this will catalyze change and create another asset class altogether.